Let's talk about real estate. My name is Aria Mays. I'm with Kaizen Realty. I have been in the real estate business for the past 18 years, and I'm excited about it. And I also want to just transfer information to you because we believe that purchasing real estate is generational wealth. It's something that you can pass down from one generation to the next generation. So investing in real estate is a great thing. Right now, the market is really, really hot in reference to buyers that's searching for houses. If you're a seller and wants to sell a house, right now is a very good time, especially if you're in the price range under 300,000. Now is a very good time to put your house on the market and get the best equity or income out of your house that you can. If you're a buyer, now is a good time. The interest rates are pretty steady. They haven't went down tremendously low. But if you do purchase a home, you can always refinance. So if the rates are a little bit higher, when the time comes that the rates go down, you can always take advantage of a lower monthly payment. So it's a very, very good time to take advantage of new home ownership opportunities that's available in the area. So if you're looking to purchase a home, please be sure to call me and I can help with that, assisting with purchasing a home and selling a house. Remember that if you're getting ready to purchase a house, a credit score that you're looking to have is about a 640 credit score. There's lots of opportunities that's available for down payment assistance. There's minority majority loans that's available that you can possibly get a 100% loan. You got your various different kind of loans. You got the FHA loan. If you're a veteran, you can get a 100% VA loan. And if a house is located in a USDA rural housing area, you can get a possibly 100% loan in a USDA area. So take advantage of the opportunity to be a new homeowner. And if you had to compare home ownership to renting, when you're renting, you're basically just helping your landlord. If you own your home, you're taking advantage of the opportunity to have equity and to own your own home. It's really important to young people when they're being growing up and in school to have a house. That's sometimes it makes a difference when they live in an apartment opposed to a house. So if you have young kids and you want to purchase a home, take advantage of it so that your children can feel good about leaving home every day and having a home to come back to. All of those things are very important in our lives and into the children's lives. Remember that when you get ready to purchase a home, a lender's going to need your W-2, your tax returns, your pay stubs. So when you're going through the homeowner process, it gets to be a little tedious and it gets to be a little bit stressful. But remember that if you got all your documents in order and you can provide everything that the lender needs, then that's what helped to make it an easy process. So prepare to purchase a home. Before applying for your loan, be sure you got everything in order. Your credit is up to par. You got all your documents that you can provide to the lender, and you can make this a smooth process. So we really encourage you to prepare to purchase a home. A 640 credit score is what's required. Sometimes you can get a house with a 620 credit score. Now we have a guest online who is going to tell us a whole lot more about the financing part. We have Miss Ruth Phillips. She's with Huntington Bank. It used to be Cadis Bank. She's going to discuss with us about the home buying process from a financial perspective. Ruth, are you available?
Yes, ma'am. Good morning, Miss Aria. Good
Okay,
morning, everybody. Is it
good
working?
morning. Good morning. Yes, it's working. It's working.
Okay.
So
I'm
Ruth, if you
sorry, I can't take my camera off.
no, you're
Just bear
good.
with me.
You're good.
Okay.
Yes, if you can tell the audience about what's available with your bank and what you can provide for them financially when preparing to purchase a home and what they need to do to get prepared to purchase a home and the home buying process. If you can discuss that with them and give them some really good tips about that.
Absolutely. I'd be delighted to. I'm going to give you some very simple steps. It's almost as easy as ABC 1, 2, 3. There are three components in buying a house that we actually look at. One is your credit score and your credit history. Credit score on some products can go as low as 580. Two, your employment history. Is it stable? Is it reoccurring? Are we going to be able to count on that income to repay the debt? And the third item that we look at is your assets. Do you have a pattern of savings? Do you have money in your checking account? One of the things that's negative about assets that we look at is, well, really two things, not negative, but things that I want people to be aware of: overdrafts. Overdrafts is another form of negative credit. So I usually advise customers to go back to their bank statements. Now, a lot of statements have a history kept on the statement that shows the amount of times you've had overdrafts year to date, and if there's some during that bank statements cycle. So in credit, what we look at there is your ability to repay. Credit score came into play, and it just demonstrates your ability to repay. Credit scores are usually you can move them up or move them down. I tell everybody they don't stay the same from month to month. It's based on your usage and your ability to repay and your ability to pay your bills on time. We look at your credit to make sure that in the last, some of the products require at least two trade lines with 24-month payment history, with or one with 24 and a couple 12-month payment histories. And then there are some credit that we can look at. Nobody, some people don't have credit at all. And so what we look at then is your non-traditional credit. How do you pay your rent? How do you pay your cell phone bill? How do you pay your cable bill? Your subscriptions to Hulu, Amazon, your subscription to the other things that are on TV. Is it Prime, Amazon Prime, and those things like that. People, we can use those as your credit if you don't have traditional credit that reports on your credit report. We've even used one time somebody's tithes where they were paying tithes to their church every pay period. That is something that you're willing to pay back or pay, unto the Lord. So that's one of the things we look at credit. We look at your balances. Are you consistently over the high amount that's been allotted to you? Like sometimes your credit balance on a credit card may be $500. And when I look at your credit report, if it's 510, that lets me know that you keep overdrawing that credit balance. And that could show up as a negative, and that could actually be holding your credit score back. So those are some things we look at for credit. There are a lot of free credit information out there online, but I do advise you not to pay for credit services or for somebody to help you restore your credit. There are an organization in town called Operation Hope, and he serves wherever you are because a lot of the things are done virtual. Operation Hope is a nonprofit organization that assists with credit restoration, and they help you with budgeting. I've had people close on their homes, come back and say, I want to know more about money management. I want to just be able to maximize my money. And I always send them to Operation Hope. Again, it's free, it's nonprofit, and they do an outstanding job on restoring credit and getting you on a pattern of saving so that you can have a future. Employment. We look at employment for the last 2 years. It must be stable. It must be reoccurring. It must be if they allow you to work 40 hours, I recommend that you work your 40 hours. A big thing that's going on right now in lending is if somebody you're allowed to work 40 hours, but just say you keep going home early because you're tired and you don't want to work. Well, that ends up being variable income because you're not making your 40 hours. That could cost you your mortgage approval status once we start verifying employment because it'll come up that you're not working 40 hours a week. So if you don't work 40 hours a week, guess what? You don't earn that much money in a month. We do advise you not to be job hopping, skipping jobs. Like it's not as bad as it used to be. No breaks for 6 months, at least be on the job for 6 months. But if you on a job where you get variable hours, that's called variable income again, you must be on that job at least for 12 consecutive months. Not always having to have a 2-year work history, but sometimes you can get away with 12 consecutive months. Education is considered employment as well. If you've been in school, say you've been in college, you've been in nursing school, you've been in trying to be a phlebotomist, any of that education, if you've been there full time, we can use that time too as employment history. We do look for a 2-year work history, which education could be included in the education. In the job history, we look at non-traditional income, retirement, social security, disability, and child support. All of those must have a continuance of at least 3 years. And so I'll start with child support first. It doesn't have to be a court order. You can have a written agreement between mother and father, and he shows or she shows a history of paying that money every month through some type of financial account. People use Cash App, they use their bank statements to verify that, because everybody doesn't have to go through the courts in order for them to support their child. Disability has to be awarded in the recipient's name, which would be our applicant. It does have to continue for the next 3 years. So that's one thing. If you're on disability or receive some form of disability, I would make sure that before I applied for a mortgage, that it was going to continue for the next 3 years. And everybody's disability is different. Sometimes they renew every 5 years, every 3 years. So you just have to get with your Social Security representative to find out for sure if that's going to continue for the next 3 years. Most disabilities that I see nowadays, they are permanent, and they would have had a history of receiving them, and they usually get something from their physician showing that they will continue to receive the disability for the life. Also, you could have supplementary income, the death of a parent for a child. That income has to be based on the child's age. If the child is going to age out, meaning if they're 16, 17, that's not going to continue for the next 3 years. I know people are like, well, if they're going to go to college, but there's no guarantee. So they will not allow me to count that unless the child has at least 3 calendar years remaining as a minor, or 3 calendar years remaining as a student in high school. Okay. If they're in college, again, I can't guarantee they're going to get that income for the next 3 years, so they may not count that. A birth certificate would be required for all of those programs. Your pension, if you receive a pension, you get your awards letter. If it's just was issued this year, you're not going to have a 1099. But if you've been receiving it for 2 or 3 years, yes, you're going to have a 1099 that you actually some people file taxes on it, some people don't, just depends. So that pension would be used for income. So that's the income section of it. Let's go over to assets. People bank with direct, a lot of the non-traditional banking, no brick and mortar, Cash App, direct, where your check from maybe Social Security goes directly to that, and you're paid on a pay card. Some employers pay you on a pay card. Each one of those non-traditional banking accounts, they do have statements. You should be able to pull those statements. On those statements, we look to see, one, what's your balance? Two, if you have large deposits, cash deposits. We may question your cash deposits and ask you, okay, so you may have to identify where those large deposits come from. Then we also look again, like I said earlier, overdrafts. Life happens. You can have a bump this month, but if you are constantly on a bumpy road and continuously making overdrafts, that's derogatory credit. I had a customer in probably 19, it was before COVID. So probably 19, I'm sorry, 2014. I did his mortgage, and he wanted, he was struggling for a down payment. So when he finally brought his bank statements in, he had over $6,000 worth of overdraft fees. And this is the truth. And he was like, well, can I get down payment assistance? No, sir, you can't because you make too much money. But however, his down payment was $5,800. He had already spent his down payment in what? Overdraft fees. The gentleman traveled, his wife lived here. He was like, I don't even pay that any attention. No, because he was making great money. But guess who was benefiting from his negligence? The bank, because they were eating him up with overdraft fees. And so if you see yourself in an overdraft, you're like, oh, that's me, please go back to your financial institution and opt out. What opting out does is protect you from overdrafts. Who cares about the person behind you in Walmart? They don't know you. Put it back. If it's going to overdraw your account, put it back. It's not worth it. If you're looking for a bigger future dream to become a reality, which is home ownership, you don't want overdrafts. Okay. So those are the three things that we actually look at. We look at those whether you're getting FHA financing, VA financing, or a portfolio financing. And portfolio financing are loans that are within the bank, our special products. Okay. At Cadence, FHA down payment requirement is 3.5%. It can be coupled with a down payment assistance program, which is through Mississippi Home Corporation has down payment assistance. Tennessee Housing has down payment assistance. I don't know if somebody's in here on here from Arkansas, but Arkansas has it. Every state really has their own bond program. Okay. So you could actually get some down payment assistance from every state that you're going to purchase in. Those programs, some of them are don't have to pay back, and some of them are a grant that will stay on the house for the life of the loan. So anytime, on the life of the loan, you decide you want to sell, you may have to pay that portion back. If you pay off the house, it's yours. You don't owe them back, and you would have, of course, paid off the mortgage as well. There are some local programs that offer down payment assistance. City of Memphis has a down payment assistance program. It will be released again in July. Their calendar year is from June to June. But usually they run out of money October, November, and it's for citizens or somebody who has income 80% or below of the area medium income. They have a chart for that on that portion of it. They also have a program for zip codes. If you're in, there's about 14 zip codes. It's on their website, but they right now offer when it releases back out in June, it'll up to $25,000. This is a grant. You do not have to pay it back, but you do have to occupy the property as your primary residence for 5 consecutive years. This program, again, there's a zip code. They have one that's low to moderate income. It is for any employee of Shelby County School System, any employee, not teacher only, but any employee of Shelby County Schools. You have the policemen, the firemen, and police firemen in the Shelby County Schools. Now, with their program, you don't have to be a first time home buyer, quote unquote, but you cannot own any other real estate if you are employed with Shelby County, the 15 zip codes, policemen, or the firemen. Okay. If you're in the 80% area medium income, you do have to be a first time home buyer. A first time home buyer is anyone who has not owned a home in the last 3 years. Now, what's special about Cadence? Well, let me tell you what's special about us now. We do offer 100% financing, no PMI. It does have a market rate. And if you purchase a property that is in a low to moderate census tract, we could give you up to $5,500 to assist you with closing costs. If you buy a house with us using FHA, VA, you could also receive up to $5,500 to assist you with closing costs. Those are some special things that we offer here. We also have a lot loan. Some people are saying, oh, I'm interested in building a house, but I'm not quite ready. But I see this lot. Great. We offer you a lot loan. You have to have 20% down, and you don't have to have plans to build now, but it must be in a residential area or an area that could become residential. Okay. So those are kind of some of the special programs that we offer here at Cadence. I keep saying Cadence because we just changed. I'm sorry. It's Huntington National Bank, and you will see signage changed in June. So I got to get used to saying that. So I do apologize to you. Turnaround time, most people take applications electronically. We give you an approval between 24 to 48 hours from the application being received. Once area takes you out to find you a house, you get under contract. We normally try to close the loan within 30 days. I advise everybody who's looking to buy a house, go ahead and get your documentation available. Make it computer ready to be emailed, uploaded to your financial institution. And I hope it's here at Huntington. And we'll be able to turn your approvals around very quickly and get you to the closing table quickly. I always advise people save, save, save at this point. No overdrafts, no overdrafts, no overdrafts. If you're interested in home ownership, my big thing for myself when I'm saving for a project is put it back, put it back, put it back. So when I'm shopping and I see something that's not a necessity, I got to put it back. I just have to, or I'm not going to reach my goal. And so, so many people have home ownership as a goal. It is one of the fastest vehicles to build wealth than anything else in the United States, unless somebody else, hits the lottery. If they hit the lottery, yeah, that's different. They would have obtained wealth, but you know what? That's going to be like one in tens of trillion or whatever hit the lottery. But that's kind of what we have here at Cadence, what we offer. We'd be glad to serve you and be glad to help you become a homeowner. I do advise people who are interested in home ownership. Fannie Mae offers a class that's educational. There are some nonprofit organizations in town that offer home buyer education. It's good look to take a good look at what you're going into, so you don't go into home ownership blind. It's good to go into Home Depot or Lowe's and get some of those education classes because you don't have a landlord to call anymore. Those repairs are yours. Also, it's good to know, I always say the three things you need to buy: a flathead screwdriver, the other little screwdriver with those little prongs all around it. I can't remember what it's called. A Phillips screwdriver. How about that? My last name is Phillips, and I can't remember to call it a Phillips screwdriver, and a hammer. So I advise people to do those things so you'll be able to be prepared to kind of do some of your repairs and stuff you may need for yourself. But be prepared, save, because when you buy a house, she's gonna make sure you get an inspection. But at the same time, things happen, and Miss Area is not going to know. It's just going to happen. We can have a home inspection done today, close tomorrow, and turn the air conditioner on Saturday and then not come on because things happen. Does anybody have any questions for me? Are there any questions in the comment? Because I'm in a car and I can't see it.
Thomas, are you there?
Yes, ma'am. I'm checking out social media now to see if there's any questions.
Okay.
Did I miss anything, Miss Area?
No, you didn't. You did very good. Very good. We appreciate that.
I am excited about being here. I
Yeah.
apologize to you that
Oh,
I'm
it's
not
no
able to turn the camera on.
no problem. You did very good. We're gonna
No
see if there's
questions?
any questions. While we're waiting to see if there's any questions, we want to thank Ms. Ruth for being here today. Again, she's with Cadence Bank, and if you all are interested in purchasing a home and want a knowledgeable loan officer, please call Ruth Phillip with Cadence Bank, which is now Huntington National Bank. We'll have her number available for you all, but be sure to call her because she can help with your buying process of the financial side when you get ready to purchase a home with your pre-approval. And she's giving you a lot of things a lot of information today that you can take advantage of. It. You'll know in advance of what to do before you get ready to purchase a home when you come to her. So I think we got a question in the chat room. Let's see what that was so that we can get Miss Ruth to answer that question for you all.
Okay.
I
It
think
says it says if I walked into your bank today with average credit and some savings, what exact steps would you tell me to take to get into a home within 6 months?
Well, first, I would ask you not to just walk in. We work remotely. Yesterday was my day in the branch. I stayed all day yesterday. So today I'm not physically in the branch, but I would be available. So I make myself available at those times. You could pick up the phone and call me. We could FaceTime. We could do a Zoom call like we're on right now today. But it depends on what you call average credit. If you have average credit, savings, and the ability to repay, I most definitely would encourage you to go ahead and buy today. Why would you want to wait 6 months? That's the first thing I would ask you. Why are we waiting 6 months? Are you in a lease? Are you just not sure? Do you want, tell me what you're got going on there. I'm here to help you fulfill the dream with what you have. So with your employment, your credit, your assets, yeah, we would try to work you in. But if you wanted to wait for 6 months, I understand. But I would give you pretty much direction on what to do for then. There's no hidden fees. Most banks and lenders disclose all their fees up front once you get a contract. All those fees are disclosed up front. If there's something that comes up, it wouldn't be on the lender side. It may be I don't know. Maybe you end up having to pay for your own what do you call it? Your home warranty.
Mhm.
I know this area requires people to have a home inspection. That's also a fee that is separate from our closing cost fees. RESPA, which is the government that governs lending, we are required to disclose our fees on the front end. If fees increase more than a certain percentage, we have to eat that fee. We can't raise it up on you. Or if it decreases, of course, we have to go with the actual fee at closing. So there's not hidden quote unquote fees, and you're not going to get to closing and be surprised. And if you've experienced that, you should go back to your loan officer and say, hey, wait a minute, I didn't know we were going to pay whatever, because they should have disclosed that on the front end. Sometimes rates have discount points. And if they do, your loan officer should tell you on the front end, in order to get this rate, you're going to have to pay this much in discount points.
Okay, that's very good. So if you all wanted to talk with Miss Ruth at our office, be sure to call her in advance and set up an appointment.
Somebody said, what determines, I can see a little bit it, the interest rate. The interest rate is based off of, they're issued every morning by 9 a.m. Of course, the government, not the government, but market issues the rate, secondary does. And so they come out, they're based on if it's going to be a conventional loan, a VA loan, our 100% financing, or FHA. Some of them are based more on credit score, loan amount, down, what's the loan to value. So each one of them is different. So if you call me today and say, oh, I got an 800 credit score, well, I can't promise you a rate until I can look at your credit, the loan amount, and the loan to value.
That was a good question and a good answer, Ruth.
Okay, somebody's saying, are the interest rates very high? Well, how about I say this? We got spoiled during COVID. We start seeing rates below normal market. Rates are back where they were prior to COVID. And if you guys can remember, most of the times the rates that drop 5 and below, there's always a reason behind it. When the market crashed in 2008, that's how we saw rates below 5%. COVID in 2020 and 21 and 22. What? COVID, that's why the rates drop. So there's always a reason behind anything going too far under the fives. And normally the reasons are negative. So I don't want another COVID, and I don't want to see our market crash again, which, the market is like a pendulum. Some days it goes up, some days it goes down. And so I, they're at normal rates right now. They're no, I think we're back to normal. Would you say the same, Miss Area?
I would say they're back to normal. I think, like you said, that we got spoiled during COVID and when the market crashed. So a lot of people bought houses at lower interest rates and they tell their friends about the interest rates that they got, but they have to really understand that it's because of what was going on in the market. So I totally agree with you. We're back to normal now. Ruth, they said, what could go wrong during the process and how do I avoid
Don't quit your job.
it?
Don't buy furniture, cars, appliances for homes you don't own. Don't miss making your credit payments. What else could don't have an overdraft.
Right.
Don't co-sign for anybody. Don't spend. Don't make large deposits in your account that cannot be traced. If they're cash deposits, and then if you win at the casino or whatever, they're going to give you one of those little slips of paper. Yes, we'll count that. But if grandmama give you $10,000, I need grandmama account number. Well, it was in the freezer. Well, you got to hold that bank statement for 60 days. So don't, those are some good don'ts. Don't quit your job now. That's one big thing. We verify employment also by law, sometimes the same day of closing. So don't quit your job. I know I got a better job. Well, see if that better job will wait until after your loan closes before you go. Also, don't take a demotion. I've had people say, well, I had to take a less in pay because I didn't want to change shifts. Change shifts. Do whatever you have to do to stay on that job until after you close. And please don't become self-employed because that's a whole nother ball game, a 2-year period, and you have to claim income and you have to have already paid the IRS or be in a payment agreement to repay the IRS. That's all I can think of that could go wrong. Anything else? What you think of, Miss Area?
I totally agree with you. I was with a lady the other day and she was closing on her house, but she said that a few years ago she was getting ready to buy a house, got to the closing table, but she had went and bought some furniture and she could not close on her loan. So I totally agree with you. When you're getting ready to buy a house and you apply for your loan, don't do anything that's going to interfere with your financial situation. Absolutely nothing. But the not the day of closing, the day after closing. Then you can go buy your new car, you can buy your furniture, you can buy whatever you want. But during that process, do not do anything. We'll see if there's some more questions. Okay, if there is, well, it seems like there is something else. I said, what's something most buyers don't ask but should ask?
I'm seeing right now, buyers should ask. We send out an approval letter. I send out a cost estimate sheet that gives you the breakdown of closing cost. It gives you a breakdown of what you're going to need at the table and what your monthly house note's going to be based on that sales price. What I'm seeing a lot of right now is people want a 350, $400,000 house, and if you bought one right now at 399, the note's going to be about $3,000. They don't look at, they're so caught up looking at their approval that they don't look at the worksheet to see how much the payment's going to be. I've had multiple contracts. People come, I can't pay that note. Ma'am, this is the same. So that means even when you're going over it with her or him, it's not registering how much this mortgage payment's going to be every month. So know what note you want and be able to accept what property that's going to be with. So if you want a $1,500 house note, you're going to have to stay in properties that'll equal out to $1,500. So that's one thing that I see right now. I just have a lady up again. Yeah, she walked away from her contract because she didn't want an $1,800, $1,600 house note. She wanted 14. So I'm like, well, ma'am, we went over this. So you have to be able to accept what's available out there now.
I agree with Ruth on that. You definitely don't want to get out of your budget in reference to having a house note and you can't live and enjoy life. So be sure to be careful that when you're purchasing a home, that you're purchasing a home in a comfort zone of what you want to pay per month so that you and your family can enjoy life, travel, and do other things beside paying a house note. So that's very important. We had another question. I didn't get it. Did you get it, Thomas?
Is other income helpful or is it important to have a job during purchase?
Long as other income is validatable, like I can verify it. Again, I went over some of the ones that are common: Social Security, child support, I forgot to tell you about dividends. If you can prove that you're drawing money off of your annuities and it's going to continue for the next 2 years, long as it is validated. But if you are getting cash payments for babysitting, cash payments, just say you're a stylist and you get cash. Well, unless you're filing that on your tax returns, I can't count it. Same thing with tips. Unless it's on the return, we can't count it. So all other income must be verifiable.
That was a good question. And another thing is that if you have money at home that you anticipate to go toward the purchasing of a home, be sure to put that money in the bank before you start your home buying process so that they can count that money, whether it be money that you saved up or someone gave you the money, because it has to be there for a certain length of time. It has to season, so it has to be there for a certain length of time. So if you have cash, be sure to put it in the bank before you start your new home purchase.
One thing I did talking about money, thing I didn't say about money, you need to have money in the bank, period. Whether you're getting closing costs from somebody else, your seller, or if you're getting assistance, but you still need money to buy a house. I know some people are like, oh, I got a house for nothing. No, ma'am, you had to pay earnest money. You got appraisal fee, which we collect the appraisal fee up front. It's $675. We also have home inspection fees. And I know Area will not let you buy a house without having one. You may have a termite inspection fee. There are several fees that you have to have up front. And so you need to have something going in it. And besides that, when you get in a house, you need to have moving money, money to turn your utilities on. Some people don't have to have a deposit, but you got to have those things there to get in the place. Okay. And if you never owned a home, most of all, you got to have grocery money because you got, and those condiments, those are very expensive. You got to have money to buy your first groceries, pots, pans. I've got a little girl who's never lived from home. She has to buy so much. I said, baby, you ain't even thought about that. You still got to buy groceries, salt, pepper, things to cook with. She doesn't have any pans or pots. She doesn't have towels. She doesn't have, see, all of those things add up and you're going to need those things. So you need to have some money. And like Miss Area said, please put your money, if you got money at home under the sink, it needs to be in the bank for at least two bank cycles. Okay. Two bank cycles, two bank statements before we can count it and not have to source it. It is hardest to go back and source $10,000 that you've had at home, even if for 2 years. It's hard to prove where that $10,000 came from.
That is correct. So is there any other questions? If not, we'll end the webinar. Okay, well, we want to thank you all for joining in today. We want to thank Ruth for coming in to attend with us today. It has been a very informative day about your loan purchase. And if you're getting ready to purchase a home, the going to the lender and getting your pre-approval is your first step. And we ask you to call Miss Ruth Phillips at Cadence Bank. Thomas will put her number in the chat line so you all can have it. But she is a well-versed, knowledgeable loan officer that has a desire to help people with new home ownership. So be sure to call Miss Ruth Phillip with Cadence Bank. We want to thank all of you all for tuning in today. And if you have any questions and we log off, be sure to feel free to give me a call. But we really appreciate you. And Ruth, we appreciate you for attending, okay?
Yes, ma'am. Thank you for the opportunity. I do enjoy home ownership and I look forward to putting somebody that's on this webinar into a home, Area and I. Thank
Okay.
you.
Thank you. Okay. Thanks everyone for tuning in today. Have a good day.